So we've got a session to cover now, which is the crypto landscape for 2018. David, obviously you're with the lender group. Maybe you can say a few words as we go down the line. Vitaly is representing CX, as you say. David, it's great to have you here from Banking Reports, and obviously your profile is in a very excellent background. So I recommend that you all have a quick look at that. And Nick Cowan, obviously, of the Gibraltar Exchange and GBX as well. Now, obviously, this is a very hot topic and a very interesting topic, and it's been very closely tracked by many of the businesses in the space. I mean, let me kick things off by a high-level question. We've talked a lot about DLT, etc. I mentioned before the whole sort of payment institution universe and different regimes that apply to exchanges and certain activity. Maybe if I'll direct this one at Nick, if that's okay, to kick things off. How do you expect that this will evolve? Do you expect that in 2018 more and more groups will try to operate in specific regimes like DLT, or do you expect call it the e-money universe to continue to evolve to capture this type of activity? Do you have any thoughts on that on the way forward?
Sure. I think we'll probably look at 18 as maybe the year of the regulator, actually, would be my take on it. And I think you're probably going to have, as we've seen in sort of 16 and 17, regulators starting to try and get their arms around this space. Regulators are mainly concerned with investor protection. And I think at the moment we have, well, primarily unlicensed and unregulated exchanges, which are growing exponentially. And obviously some of those came out of China after their action in 17. I think you have different regimes. You have Japan that has a fully licensed and regulated regime. You have America where there's, I think, a registration process without actually formal regulation. And I think then you have really us, Gibraltar, where there is now a DLT framework in place. So I think the landscape from where we see it is, I think it'll be actually driven by the regulators. So I think as regulators start to bring out regulations saying, this is a licensable activity, you need to be licensed, we're going to regulate you, then I think that will drive, I think, the landscape as we move forward. And I think places like Gibraltar are, well, I think we're already seeing it, but we're probably going to see an increasing number of exchanges look to come here. Because if you're going to be regulated, then obviously it's easier to be regulated in a jurisdiction where the regulator understands the business. That's often the challenge. I think somebody said earlier today that, or I heard it, that the problem is you might have units within a regulator that could be looking at the sandbox, but you go outside of them, and it becomes actually there's a lack of knowledge in terms of this space. So I would see that 18 is going to be the year that the regulators effectively catch up, I think, with the market.
That's very useful. I mean, what about? I mean, again, it's a high-level question, and I'll post it to all of you. But in terms of some groups operating within some regulatory environments, some in others, etc. Generally speaking, from an exchange point of view, how does an onboarding process for, let's say, a new type of currency or token or whatever it may be, how does that work, or how does that differ depending on the regulatory environment that you're based in? What are in a crypto asset or a new token, what is the typical kind of onboarding process? What are the things that you take into consideration? Do you have any comments on that? Maybe Vitaly, if you got.
Yeah. So regarding the first question that Nick was answering, we actually I'm totally agree with that 2018 will be the year of the regulation, and we see a lot of movements, for example, in the UK. The Treasury Committee formed and they came up with a statement that they're going to be looking at crypto industry for the next couple of weeks. And the answer to that, we, like in the UK, together with some major crypto companies, we formed an association. And the tricky thing here is that we don't quite understand what are they talking inside the Treasury Committee. So we are trying to reach them in the UK just to understand what are what their approaches are and what they think generally regarding crypto, because at the end, this like what they come up with might be kind of damage limitation exercise for us, or rather we can benefit from working with them. So we also talk a lot with the FCA in the UK, for example, and they're quite optimistic regarding the crypto. And we see a lot of things happening with different jurisdictions around the world. So yeah, just to comment on that 2019 will be the year of the regulation. And regarding the onboarding process on CEX, so back in summer last year, we only had Bitcoin and Ethereum on our platform. And now we have 8 different coins. We've decided not to take any ICO projects, any ICO tokens to the platform, because it's still very unclear how this might affect the business of the business of the marketplace. So we basically look at the liquidity, obviously. We need to understand whether the token is liquid enough and whether there's enough interest on the market, so we can do business with that, basically. And the funny thing is, nevertheless, we advertise a lot that we don't list any ICOs. I've been approached like 10, 15 times every single week with different ICO projects requesting the listing on CEX.io. And the funny thing is, I would again share this pain with the previous panel, that like 95% of them fail on the question whether you do a proper KYC or IML. This changes over time, but we still see a lot of people just don't understand how the KYC and IML thing work in general. So we think we might reconsider adding ICO tokens to our platform, but not earlier than probably end of this year, and we'll obviously come up with a list of requirements.
And do you, just to follow up on that, I mean, do you see, I mean, you mentioned the liquidity factor. What are the other sort of key factors that you consider? Is it the AML side of things that you're focusing on? Is that?
Yeah, so if we are talking about the ICO projects, obviously, like their approaches to QIC, to AML, the support of the community, the liquidity on the market, the clear understanding on what they are trying to achieve, and again, trying to analyze whether there is a real business behind the token, not just speculative price, basically.
Yeah.
So, yeah.
And let me ask David a quick sort of follow-up, sort of interactive question to that. But there's been a lot of discussion around the whole banking interface, etc. We talked about some of the, so maybe the AML sort of focus point for some of those questions. I mean, how do you generally see the interaction between the banking universe and this new universe? And to what extent do you see that evolving or developing or maturing or whatever we might call it? Or what are the key points that you see the banks focusing on when they're in these kinds of discussions? Could you comment on that, do you think?
Absolutely. So I am David Yuri, and my primary activity is training bankers all around the world about fintech. Obviously, crypto and blockchain are 2 areas out of the 30 main key areas within fintech, from crowdfunding to peer-to-peer lending, from robo-advisors to biometrics, from remittance to mobile payments, from digital wallets to artificial intelligence, from APIs to big data. So there are at least 30 major areas within fintech. And the big development of 2017 in the minds of the bankers I am training all around the world was that they learned the crystal clear differentiation between cryptocurrency and blockchain. They understand the common origin. They understand the major risks within both arenas, but they understand the huge differences. And this is good. because this is based on facts. What is, however, very exciting, and for some of us it's negative, for others it's positive, is that as the crypto arena is exponentially growing, tensions between the traditional system and the new system are also exponentially growing. And the question is where these tensions will precipitate in 2018. And one answer is regulation. We have to resolve this tension by clear regulation. Gibraltar is 10 steps ahead, not one. And that's good news for you. But there are other two R's for 2018. Regulation is the first R, but there are two others. One is rate hike. We are in a global rate hike cycle in major economies. And my personal and professional opinion is that this rate hike cycle will be unexpectedly dynamic and steep. And that's gonna change the landscape. Not only the blockchain and cryptocurrency landscape, especially the cryptocurrency landscape, but all other fintech funding related things. Just one thing. When we think about gold, the first thing bankers tell me is that gold has no content of interest. Gold is not paying an interest rate, as opposed to money as we understand it. Think about cryptocurrencies in this sense. Now I just mentioned one aspect. There are 100 relevant aspects. The third R is refocusing. I think that regulation will be so strong in some jurisdictions that many people and companies currently primarily focusing on crypto will have to refocus on DLT. Some will survive and refocus, some will not be able to do this. So these are the three R's: regulation, rate hike, refocusing. And the tension is growing. Some bankers at my training programs put their hands proactively up. We are talking about something totally unrelated to cryptocurrencies, digital currencies, or even DLT. They just put their hands proactively up and they say, the next crisis is brewing. Regulators should do something. Why are regulators not doing anything? And so on, and so on, and so on. They may be wrong, or they may be right, but the tension is rising.
That's interesting. And look, I mean, we've heard quite a bit about, I suppose, the interaction on the banking side, various sort of exchange-specific questions. I mean, one of the other things, I mean, David, I'll direct this sort of your way. I mean, the other day we had this news about the Circle acquisition of Poloniex. So outside of the pure sort of banking side of things, if you think on the lending, or let's call it the OTC universe as well, that seems to be very fast evolving. It's not activity that's directly related to the exchange activity, but it's associated in the space. How do you see that space changing or evolving, or your sort of interaction with that on the lending side of things? How do you see that changing in 2018?
Well, when you mentioned Circle acquiring Poloniex, that's an example of the big boys getting into the space now. I think Circle has had $50 million in funding from Goldman Sachs. So they're a very big player. They're into payment services. And you can see there that they're going to form a bridge between the crypto exchange and then getting, you know, a very big merchant services network going. So the other thing about their business model, their current business model, is that I think the minimum trade is something like $250,000. So they're used to dealing with very large amounts of money, big transactions, and that's where higher levels of KYC and AML come into play. So I think, you know, that's all moving towards regulation. Circle, I believe, were the first company to get licensed, to get a BIT license in the USA. So I think that's really pointing the way ahead.
It's interesting because we're seeing this large space, or the large, more, let's call it institutional type element. A lot of that is developing on the OTC side of things. A lot of general interest is developing on the exchange side of things. One question I did want to raise specifically for the exchanges is, how do you guys, if let's say, Vitaly, you mentioned in the profile, I think, 500,000 users on CX at the moment. How do you see CX, or Nick, how would you see GBX in the future also competing with or seen differently to the decentralized platforms that are evolving or looking to evolve and aggressively sort of pursuing the space as well? David's comments on I suppose, that institutional side of things. On this basic side of things, are you seeing more people going into the centralized type control mechanisms or moving into these the Ether Delta universes of the world?
Yeah, so first of all, I think, again, the market is very premature, and the idea of competing against the decentralized exchanges is too early, to be honest, because if the blockchain and crypto is very premature, then the decentralized exchanges even more premature. And there are obviously very particular problems on the decentralized part, like the liquidity problem, the speed problem. And we see for the last year, obviously, a lot of retail customers coming to this space. We obviously see a lot of interest from the institutional investors. We again see a lot of bank interest to the industry. But as more and more retail customers coming to the industry, decentralized exchanges might, at this stage, they just can't deliver the relevant user experience. And that's the problem with the decentralized exchanges, from what I think. Then so basically, yeah, the user experience is the main point of having this kind of competitive advantage on the decentralized part.
I imagine, David, I'll ask Nick to comment on that maybe as well, but I suppose from a pure banking perspective as well, the regulatory framework around a centralized exchange will be dramatically different to what it would be for a decentralized platform typically.
I think regulation will touch everything, and it will be related some negative events which will sooner or later come in the future. And I think that in major jurisdictions within 2 years, only clearly regulated entities will be able to exist. However, decentralized solutions based on the logic of blockchain, decentralized databases, autonomous ecosystems will develop step by step. This is more of an incremental development. This is hard. This is here the business case has to be proven. Here we are 5 steps from going mainstream, not only 1 step, and we will see. But what I expect is some major negative developments which will make regulators a little bit too tough in many jurisdictions. However, the players have to come up with plan B to survive it and even to capitalize on it. And many players will be able to come up with this.
It's a huge question. The whole decentralized versus decentralized is a whole, I suppose, very deep and wide question. So without wanting to, with only a few minutes left, what I wanted to also raise, and maybe David, if you could comment this high level. Sometimes when people talk about any crypto exchanges or any facility that's offering services in the space, some of the immediate concerns are always raised around security arrangements, safeguarding security arrangements, particularly on the exchange side of things. Do you see that either evolving, or do you see that people moving away from that to build their own mechanisms, or is it a focus point for certain businesses? Maybe you could comment on that quickly, and then I'll ask Nick to comment on that as well.
Yeah, I mean, you see, in terms of security, no one can ever maybe guarantee complete security, but I think if there's companies operating in a regulatory environment and they're using cold storage and vaults, like we've had several interesting stories about vaults in the rock, Gibraltar being a very secure and safe place. And I think also the, big insurers now are getting into the space. They're insuring exchanges, which gives people a lot more comfort and gives people a lot more consumer protection. We personally, we've got a lending platform. We're only working with FCA-regulated lenders because we feel that sets the bar. We could have gone down the peer-to-peer route, but we believe that working with entities who are already regulated is the way forward, and it's a good way to fast track the whole process. That's why we're very excited about what's happening here in Gibraltar.
That makes a lot of sense. I mean, Nick, anything to add there where, again, high-level people are saying, or some general points are always around, well, you can't custody your assets on a crypto exchange. It's just too risky. Now, they're dealing with very certain and very specific examples, and I know this is not something that applies everywhere.
Regarding the security on the platform, it's actually like from very beginning. This was the very major concerns on our team, and we basically very early just acquired the team from the major bank in order to build the software and both for compliance and for processing within the platform. And the cold storage and the balancing between cold storage and hot wallet is also the kind of major concerns in terms of IT and security. So on CX.io, like 90 to 95%, depending on the volatility on the market, are kept in the cold storage when we talk about crypto. So I just wanted to add on about the banking, because like we talk a lot to different banks across the globe, and Cycle buying Polonix is like the most advertised case. But if you look a bit earlier than that, then Revolut, which is a UK-based startup, announced that they actually launched crypto wallets within the app. And Lloyd's, which they work with, basically confirmed that they are okay with that. And then a few weeks before, ING Bank, for example, confirmed that they opened an account for Bitfinex. So I see personally that there is a lot of interest from high street banks in this industry. They just need some kind of push and security from the regulatory perspective to work with crypto, because like there is obvious a lot of interest in that.
I mean, it's a very interesting area. I mean, you mentioned the Revolut thing. The interestingly on Revolut, although they have an account or have that relationship with Lloyds, you mentioned, the customer doesn't actually have access to that wallet himself. It's impossible to access that through the application. And then I suppose there's a case, whatever it is in Japan, and there's a hack, and again, it becomes sort of front page news, and the concerns arise. I mean, Nick, how have you guys approached this or thought about the security type arrangement? Is that a focus point?
Yeah, we're taking it very seriously. I think if your question earlier about some of the onboarding standards and decentralized exchange versus centralized exchange, I think for the moment we're all going to coexist. So I think at one end of the spectrum, you've got us that are going for the sort of industrial grade protection, where only issuers that have gone through our vetting process, they can only sell those tokens to clients who have opened an account at our exchange that have been KYC'd and AML'd up. So that gets kind of around that program, that problem. And for us, we have 100% cold storage, so it's actually less convenient but secure, 2FA, etc., all that sort of stuff, private services and everything. So that's kind of one end of the spectrum. Then you've got in the middle the actual really fast-growing, some of which are ex-Chinese exchanges, where Albert mentioned this morning shitcoins. I think if you pay the right price, you can get your token on there. And they say they've got a 45-point checklist, but they haven't. It's basically just pay your money and come on. And then you've got the decentralized exchanges where basically it's, completely autonomous. I mean, we've just completed our own token. Our token is traded on a licensed and regulated exchanges, but it's also traded on Ether Delta. So, it's an example of, those guys will crack on and do what they do. So I think the market will drive that process. We'll coexist for a while. And again, probably until regulators catch up. But if you're into investor protection, which kind of is the thing which keeps us awake at night, then, we're off at that end of the spectrum where it's sort of institutional grade.
And I think we are currently with crypto and blockchain regarding the regulation, approximately on the same stage where the crowdfunding and crowd investing was kind of several years ago, basically. A lot of initiatives around the globe, a lot of talks, a lot of interest from the regulators, but eventually the regulation was put in place.
Yeah.
I think we're out of time.
Yeah, okay. So, lots of other difficult... You got away from the difficult questions.
Thank you very much, guys. I think this is a session that could have gone for much longer, so thank you very much for your input, but we're out of time on this one. Thank you.